There we are. Okay, and we are live. Good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 21st of June. So, only 21st of June, first day of summer. So we have sunshine here in London, which is highly unusual. So it's a good day for everyone. Yeah, and the weekend, as promises to give us something for once. Okay, let me start straight away. Let me start sharing my screen. Okay. Sorry, can you see my screen? Hopefully, everything okay? Yeah, perfect. Where are we? To find the. Can you please make sure that you mute your microphones? I'm getting some background noise. Okay, where are my things gone? Okay, let's go and have a look first of all at the economic calendar. And bring in Forex Factory. I'll give you a better. Okay, so this week we've had a few bits of economic news, mainly for you guys in Australia, interest rates has been kept at the 4.35%, so no change there. We've had some slowing retail sales figures from the US. And by the way, so these are all like kind of little nuggets of information that gives us like a snip of how things are going in the market in the US. We keep getting some still kind of conflicting news, a little bit of good news, a little bit of bad news, but these the economic outlook, it's slowly deteriorating. On Wednesday, we had the CPI from the UK, which is now, for the first time since forever, is back at the 2% target range. Although the core CPI, it's still at kind of far away from that at 3.5%. So these are all like indications that the pressure to the central banks to keep the interest rates higher for longer is like decreasing. And then we had on yesterday where the Swiss franc that again did the second lowered interest rate for the second time. It's obviously the first mover of the major economies to lower interest rates, and this is the second cut. They've gone from 1.75% to 1.25%. So that cycle of lowering interest rates has, at start. So we've seen the Swiss franc, we've seen the euro, we've seen the Canadian dollar lower interest rates, but not the US and not sterling either. As yesterday, again, the rates were kept at 5.25%, so no change there, but like a softening of the stance towards future interest rate cuts. And today we had some retail sales figures for the for the British pound, and then the rest of the day will be mainly some manufacturing and services figures coming out for the euro, for the pound, and for US dollar later. So nothing too major to expect. Today, no major surprises. As I said, we had the rate season basically between the last couple of weeks, and that is now it's now ending for this month, and it's the picture is that there are signs of a topping out of the hike cycle and starting to ease for reasons that we will see in a second. So going to share with you some bits here. We'll look at this later. Okay, so this is what the this is what the Fed looks at. Okay, so the blue line is basically the central bank rate, and the orange line is the favorite figure measure of inflation, the PCE inflation, which is now running still at just about 3%. Now, what really you want to concentrate on is the amount of tightening, what is called making it difficult for everybody, is the distance between the inflation and the Fed funds. Okay, so that tells you that now for an extended period of time, since mid 2022, we have been operating. The American economy has been operating at 2% real cost of funds. Okay, so the distance between interest rates and inflation. So that difference is what you will get if you are like a saver. You get more money than the devaluation of your of the funds that you have invested in savings, if you manage to get the top rate, that is. This is the real weight of tightening. Okay, and we can see it's not so much just the distance, but also how long this this process lasts, because obviously the longer the time it goes on, the more the deeper the effects will be felt. Now look at the next one. So what an interesting thing. So this is like what the market implies, what this neutral rate, it doesn't really exist. It's just like an estimation. That means what is the rate of interest that would allow the economy to function well, to keep growing, but at the same time controlling inflation. So this is what is meant by neutral rate. Now, what happened this week is that the Fed has revised what is called the long run dot, which is the Fed neutral rate. So they are now fully in the camp of actually will be okay with a higher cost of capital long term. Okay, in a way, just confirming that they're into higher for longer camp, and even like if you see, so at these levels, these are right high levels of neutral rates will never really function very well. Okay, so the market is at the moment is having an expectation that the rates will be at 3.5%, and the economy would work well at that level. Now, the Fed is slightly of a different opinion, just having a lower target, but it's still, for the first time since 2019, they now have revised this to the, higher. So in a way, we were looking at the three scenarios that we had before, and this is fully buying the Goldilocks scenario of a soft landing, basically. Okay, now if we look at what the percentages are of expectations and how they have changed in these past week to 10 days, okay, we still, the higher probability expectation is to have a sticky landing. And you can see that this has actually increased in percentage now, probability by 5% just in the past week. The higher for longer actually decreased by 7%, and the extremes, the extreme, like the expectation of a recession, has stayed unchanged at about 14%. So the higher expectation is to have a sort of like easy-ish landing. A sticky landing means that will last a little bit longer than a soft landing. But the expectations of rate cuts by, and say in the next 12, 13 months, the expectation is to have four rate cuts between now and summer of next year. Now, what surprises could be in the near future from this? This is what the market is basically pricing. Okay, so what the market is expecting to happen. So what could be a surprise? Could be a surprise on the, if there were not 4 cuts or less than 4 cuts, and the rate would stay above this level, or could be a surprise if there were more than 5 or 6 cuts. So in a way, going with what the market expects, it's not, I said, so it will not give you an edge. Let's put it that way. The edge can come not so much by being right, but by having a look at where the market is behaving kind of like irrationally, and where the surprises could be. Okay, and for me, the surprise here could be that the Fed, which is widely expected now to start cutting in September, the Fed will have to cut kind of like faster than previously anticipated. Now, as long as, so this is not going to happen as long as everything is hunky-dory and everything is going okay, especially in the labor market. But if we start seeing, as kind of we've been noticing in the past few weeks, like an inching higher of the number of unemployed people, if there was like a deterioration of the labor market, that could is one of the Fed mandates to keep a healthy labor force. So if they might be forced, the hands might be forced to cut faster and deeper than previously anticipated. So this is something that I wanted to talk to you, because I know that in the past quite a few of you had asked about what happens is, the end of the dollar is coming, or what about if Saudi Arabia sells oil not in US dollars but in other currencies, or in this like new like BRIC currency that is going to, doesn't exist yet but will exist in the future maybe. And kind of like, this is kind of like a reality check for everybody, because so this is how the forex reserves are invested in bonds across the world. Okay, so you can see, although there has been since the 2000, there has been a slow diversification away from the dollar, which has gone from 70% to 60%, is still by far the most liquid currency out there. And when you think about something like the Saudi Arabia, with all the oil reserves, they need to sell this oil. And by the way, there has been some things in the paper about the Saudi Arabia is not renewing the oil contract with the US. There is no contract in place. There is just an understanding that Saudi Arabia would keep investing some of their surplus from the sale of oil in US dollar treasuries, and the US is going to carry on providing debt, okay, basically, which is enough for the Saudi Arabia to invest in, because when you think about it, when you talk about the end of the dollar or the birth of another currency that could take its place, just think about it from the point of view of the people that use these dollars to sell their products, like oil in this case. So what do you do? What would Saudi Arabia do in 1970 once the dollar decoupled from gold? What do they do with the proceeds of their sales? The economy is not of a size that is large enough to be able to invest all this surplus, in their own economy. So what they basically did for the last 50 years, it's invest some of these extra funds in assets. They are liquid, and B, safe, and keep the sort of like value compared to other currencies, not so much to commodities, but and they're very easy to transact in, and they're very easy to use to buy other goods, because you're not just getting paid, but then when you go out and buy other things with that money, you need to make sure that the other counterparty is happy to receive your currency. So this is an example of what the global international reserves look like, okay, from all the way from the beginning of last century to the current day. So and you see, like, especially after the Second World War, you see the majority of the reserves were in gold, until basically the US stole everybody else's gold. And then there was a long move away from gold. And can you see what took its place? Basically the US dollar. Okay, to replace this as a matter of kind of like international currency, at the moment it's just not possible. There is nothing else that can provide that sort of liquidity, because it's not so much a liquidity in terms of money, but liquidity as an investment asset. So there is nothing else that has got that sort of volume, because the long-term US bonds are like an animal of its own that is completely controlled by the market. So there are even the US government doesn't have enough clout to move the price of long-term US bonds significantly, because of the huge size of the market itself. So there is nothing else, and not Europe has got very, that doesn't have enough issuance of debt. Japan, although they have enough debt, they've got almost 10 trillion worth of debt, but most of the debt is owned by the Japanese central bank. So and on many days there is very little trading on Japanese bonds. So this at the moment is the only option. And although you see what's been happening since 2015-16, now the gold reserves have been increasing every year. Still, in a modern economy, gold wouldn't be either the right asset to shore up different countries' economies. Now, can you imagine like a central bank having to move hundreds of tons of gold to support a local issue with their own economy? It's just not feasible in the same way that it was in the at the beginning of the century or before the wars, because we are in a completely different environment. Eric, you had a question?
Yes. Where would we be with the cryptos there? The amount of crypto on this chart.
Sorry, there is no crypto in this chart. I mean, this I'm talking about.
No, I know. But the height or the amount of crypto, where would that be?
Sorry, what do you mean? What do you mean? These are like talking about international central bank reserves at the moment.
Yeah, but if we would add crypto now to this chart, how high would crypto be?
Well,
do you have an idea?
Yeah, no, but it wouldn't be anywhere around here, because central banks do not have crypto as reserves. So it could be an option, but it could be right at the really tiny at the moment.
Okay,
because it's something that they starting to consider now as a possibility. But if you, with the exclusion of El Salvador, there are many central banks or governments that actually hold crypto as an investment. There are some that might hold crypto because of frauds and having taken it out from fraudsters. but as an investment vehicle at the moment is still not an option.
Thank you.
We can speculate, will it be in the future? And we know our think about that, but at the moment it's just not an option. And from the point of view of global trade, there is no alternative at the moment. As we speak, there is no real alternative to the dollar. So no BRIC currency, the euro, the yen, at the moment couldn't replace the dollar at the current time. It's if and when it happens, it will be something like this, like a very gradual process that will take time to develop, because when you think about it, this is a huge amount, like trillions and trillions of US dollars that are held by all countries in the world. Now, what's their interest in trashing the US dollar? And this is what you got to think about, because even kind of enemies so much of the US, like you could consider now, Russia and China. China is probably the biggest holders of US treasuries. Why would they crush the price of the dollar and basically lose trillions worth of value that they hold in US treasuries? So they would need to very slowly divest from treasuries and buy other things with it. But there is a liquidity issue that simply there isn't enough there to replace all the US dollars at once. So it's a process that will take years to, if indeed it does happen, it's not something that's going to happen tomorrow. So hopefully I will have put that worry at rest. This is another example. So this is the dollar as an international currency. And apart from Europe, you can see that in Asia, the rest of the world, we're still talking about around 80%, 75, 80% of invoicing being in US dollars. Okay, so this is in effect, the US dollar has replaced gold as an international currency exchange, and as anything, this is something that, moving from this scenario where pretty much 80% of transactions are done in US dollars across the world, to something where the majority is taken then by something else, whether it be in the euro, the BRIC currency, or anything else, cryptocurrency. It's a long process that will take a while to develop. And this is the reality right now. So we can't really argue with numbers. And this also shows you the problem that there is in terms of, what does Saudi Arabia, the big sellers of commodities, they've got natural resources. What do they do with their money? So they sell their resource, they sell their oil, and they get dollars in returns. Or if they were to get other currencies or other gold, other things instead of US dollar, these are the kind of assets that they could possibly invest in. And the denomination of the vast majority of the assets is in US dollar. We can even see that from 2000, the amount of euro-denominated assets with the AAA classifications have actually declined. So yeah, you can get paid in other currencies, but you would struggle to find then a use for these other currencies, once you sold your products. And this is the reality. Okay, so most of the investable assets are denominated in US dollar. So I know it's a sobering thought, but I think we got the dollar still being around for a while longer. Okay. Let's go and have a look at some crypto news and see where we are right now, because I think this is what most people are interested in. So we still not much has changed. Not much has changed since last week. So this is like 1, 2, 3, 4, 5. We are, we're 66 last, whatever, or were we on Friday? Friday we were 66,000. Today we are about, about 65. Not much has changed. We're still in this kind of like range here, between the all-time high and these actual retests that we had at about 57. We really have been in this space ever since having a new all-time high. So we're still ranging. And we'll go through a few reasons why this is happening. But at the moment, I'll say the more likely place where we could see a turnaround will be probably in this area between 63.5 and 60,000. And we still have the same targets as we had before. So moves like some impetus and a move around 72,000 would then probably take us to creating new highs. Now, how long will this take? That's the usual. When is this going to happen? Nobody knows. It's something that took a while in 2016. It was quite fast in 2020, but at the moment the market is showing little interest in going all in into Bitcoin. If we see what happened recently with the ETFs, looking at here, we can see the net inflow of money into the ETFs. We can see that we had mid-May till the beginning of June, we've had kind of like a green period with a lot of funds coming into ETFs. Now there is a little sell-off that we've had for the past week. So the last 5 days trading have been all negative, but it comes after quite a lot of funds that came in over 2 days at the beginning of June. You can see almost like 900 million, and another 500 the day after. So although we had a sell-off of 2, 4, 7, 800 million over the last five trading days, 6 I would say, because we had a day's holiday. we're still well within this range, and you can see here the total now is $14.7 billion. So we were for a long time here between mid-March and mid-May, we were around the 12 billion range. We now broken past that, and we're about just short of 15 billion coming into the ETFs. Now, if the ETFs are not kind of like selling that much, because it's still, the amount is still growing over time, where is all the selling pressure coming from? And there are a few things that we can have a look at. Where are we? And the main thing that we got to consider is that what happened in April was, remember, the halving event, and what happened during halving event is that miners now are getting half of what they were getting before the halving as a reward. So what is the fallout of that is that what normally happens after halving, and this is why it takes a while before the halving and when the market really goes into a bull cycle, is because it shakes off the weak miners. So there are some miners that have very strong operations, and there are quoted in the stock exchanges, and they got billions and billions of support. But there are other miners that have still got like outdated equipment, and they just about make enough to carry on, until they can't anymore. And when they tend to, these miners, the weaker one, tend to fail, what happens is that they sell the Bitcoins they had on their books, and that obviously pushes the prices down. So what tends to happen, and the reason why this time has taken probably longer than it has done in the past, is that for the first time there are NFTs as well on Bitcoin, and that has brought new traffic. And another way of for the miners to make money, because it's not just then the reward that they're getting, but also they're getting a lot more fees due to these increased trading fees, basically. And so, even businesses that were kind of unprofitable have kind of carried on for a little bit longer because of this extra revenue. So what we generally tend to see, so this is the hash ribbons, which are basically the difficulty of the miner. So the more, this is an indicator of how many how strong the network is, because the higher the level of these, it means the more difficult it is to actually create a Bitcoin block, and so they needs like more computing power for obtaining the result of creating blocks. So after the halving, you can see that the hash rate has actually come down. Actually, you can see here the the blue and the mauve lines have come down slightly. So what we need to see is it's kind of like a capitulation of some of these weakened miners, and for then resetting the market, and then when we will see the proper bull cycle start in earnest is once we've taken these extra sellers basically out of the market. What have I got to show you in a second? Go back.
Luca, does one know how many miners there are?
Sorry, how many miners? Yeah, there's many different companies. A lot of them are quoted in the stock exchange, so you can have a look at that. But it's in terms of numbers. So this is what you're looking. So this is what you really want to look at. This is the computing power that is competing. So the higher this number is, the more the more computing power is employed to make Bitcoin work. And so the more secure, at the same time, it's the highest this is, the more secure the network is, and the highest the competition is for new Bitcoins. What did I? Okay, sorry, let me just go and show you this. So this is another visual representation of the hash ribbons. Okay, so you can see when this declined before, which was at the beginning of 2023, when crypto prices really started growing from from a low around 15,000-16,000 to where we are right now. You can see we are in a similar situation right now, and so the expectation generally when this happens, it marks kind of good buying opportunities, and then from then on, as the let's say some of the weaker miners get shaken off and their capacity then is absorbed by the other by the existing miners that are doing well, we can see then the power behind the Bitcoin network then increases again, and we'll see these are showing you periods of expansion, which then takes with it as well and interest from the public, because you see everything in cryptocurrency is growing, money is being made, and so people are more interested in assets when they are growing fast than when when they're doing nothing, even if the the doing nothing stage is probably the best opportunity to buy. this is another thing that also that's changed since 2020 with the inception of the Bitcoin future market. So where before you had to buy, so if you wanted to invest in Bitcoin, you just had to buy spot Bitcoin. There was no other option. In 2020, then with the inception of the futures market, then you now have basically what's happened is that they created a paper market for Bitcoin, so that even people that don't own any Bitcoin can sell you it. Yeah, that's great, isn't it? That's similar. That's remind you of banking at all. You know, they can sell you somebody else's money and charge you for the process. Pretty much is the same thing. So in what I want to bring your attention to, obviously, the top line is the price. The bottom line is the spot market on exchanges. Okay, spot Bitcoin on exchanges, and that number has kept going down from all the way from 2020. But you know what really the effect is felt by combining the spot ETF with the futures, because at the end of the day, what we need to see it's a decrease on the of the supply, and the supply is the combined spot and paper Bitcoin. So all the times when the supply is growing, you can see, so this was growing all through the bear market. Okay, and can you see here at the end of this arrow, as the supply started going down, this is when the price started going up. So at all the times when we see supply going up, more paper Bitcoin being created, even if the real Bitcoin is going down, we see periods that the price is not doing much. Okay, and we are going through one of those phases right now, where the amount of Bitcoin being traded is still increasing, and so this is why the prices are are being kept under control, so to speak. So it's not, well, what can I say? There isn't one thing that I can point you to that's saying, look, this is how it's going to go. It's more like getting hints and tips from different places to get a general picture of where we are in the market right now. The one thing that we haven't seen yet is this kind of like, oops, sorry, what am I doing? Sorry, let me just remove this. Okay, what's happening? Be my nugget. Set the report. Okay. So what's happening? What we haven't seen yet is anything like this. So we haven't really got to this phase in this cycle. Okay, the phase of the rapid growth, which is as I say, it's still to come. The one thing that's interesting is that as we haven't seen that, and obviously the people that say, oh, the cycle is already finished, we're into a bear market. I mean, it couldn't be further from the truth. But the interesting thing is that cycle hasn't even started yet, and we are consolidating at the top of this range. So if you go into like really long term, like a monthly chart, yeah. Now it's easier to see. Where we come from in January 2023 and where we are right, and where we are now. So that is the move that we have seen. Okay, quite dramatic from 15 to 73,000. Now, out of this move, what do you think this actually pullback represent? Okay, so 15 to 75 is roughly 60,000. Now 75 to 55 is 20,000. Okay, so it's 1/3. This is 1/3 of the move. You can measure if you want, You can see, so this is 377%. So it's, what's that? 58,000 difference. And so the interesting thing is that, okay, if this is at the moment our local bottom, okay, so these are the extensions of not even, this is not even a strong move compared to what we see in 2021, but you know, this is where the starting point, if we are touch the bottom of 58 and we're not going any lower, and you know, and nobody knows if we are or not, but you know, the extension of this move will easily take us to above the 6 figure. Okay, so this is kind of expectations on a macro level, thinking where could this take us to, and you know, remember, you heard me talk about it before, you know, the like geometrical interesting point, and the ones that, you know, a lot of people use is like the golden ratio and derivatives of the golden ratio. So golden ratio at the moment will be indicate that will be reached at about 150,000. This is, you know, it's just a, you know, just a guess, but I would say this will be like a conservative estimate of where we can get during the bull cycle. So at the very least, say doubling where we are right now. I mean, this is not investment advice, guys. It's just like I'm just like playing around with numbers, but this is what we're seeing so far. Okay, we have, you know, other statistically interesting facts. We had 7 months of continuous growth, and this is the first time it happened in Bitcoin history. So obviously there was to be a pause after that, and at the moment we're still in this holding pattern. Okay, we had the last March was a good month, April wasn't, May was pretty good, and now June is in between. So we're still going, you see, up, down, and until we have a proper breakout of this range, which will happen at either at a new high or below 56,000. So the two things that you can ask yourself, okay, what happens if we break on the upside, and what happens if it breaks on the downside? Okay, if it breaks on the downside, then you know the next level where it could stop is down here, about 43,000. Okay, I know it sounds a lot, because basically like 50% down from where we are right now, but this is what the charts are telling us. Okay, and so that's we can have a kind of like a best case scenario, and for me, if we were to break this, then that would be the next stop, and it would take us down to basically the ETF launch at that level where we were in January. On the other side, we can, you know, we can all start throwing numbers at this and say 200,000, 300,000, 500,000, you know, 150. They're all just guesses. But the one thing to, you know, that I keep an eye on is that, you know, when will Bitcoin stop growing, or at least this, like at this pace? It will be when the majority of the population then is using Bitcoin every day. And then it becomes something like very reliable, very steady, with very little volatility. The moment we're still at about 5%. So there is a long way to go before the majority of the population, even if we don't get to, you know, 100% coverage, but we only get to 20, 25, 30%, there is still a long way to go to get to that point. What we have seen lately, which is another thing that, to be honest with you, we kind of like blindsided, you know, a little. I wasn't expecting, has been a real disinvestment from let me go into daily, from altcoins. So this indicates the altcoin market, total market cap, so excluding Bitcoin and Ethereum. And so in June, especially like this week itself, on Monday, we had a drop of almost 100 billion has been wiped off the altcoin market. So when you see it like this, so again, we back at, this is like 2020, end of 2022, the bottom of the market. We are now, we reached the high, in March when Bitcoin did a new all-time high. So we have got levels now that are consistent with the start of this move, which was, when Bitcoin started moving after the ETFs were launched again. Okay, so this for me indicates a kind of like a very good place to to actually accumulate crypto rather than panicking and selling off. And we can see they already worked in April. We went back to that point, and if you bought at this point here, you would have made a lot of money here. Okay, a lot. Because these increases are quite sharp. Okay, 30% basically, 30% in a very short period of time, and this is just the average. Okay, so within that average, there are coins that are down 300-400%, and there are coins that are down 0%. Okay, so 30% as an average over that period is very significant, and that's the the kind of the game is trying to guess when is this market then actively being sought after, and why we're seeing this sell-off. Part of it is, as we discussed before, that we're talking about other things that take people's interest, and the big narrative in 2024 is that people buying and trading shitcoins, or also described as meme coins, or other things like that, things that they don't have any, for even their own emission, they don't have any value in themselves, or they got very little development, but they're still capturing the public's attention. And that obviously, being a limited amount of capital that can be invested in anything, so if it goes in one place, it doesn't go in another. Anyway, a few more things I wanted to show you. Where are we? We're almost finished. So I just want to show you how bad, so something that maybe is worth noting, that how bad some of the crypto media can be. Now, if you read this news release, I mean, literally, USDT is the official stablecoin and was issued by Tether on the Tron network. Really? So this is news to me. So I know it's available on Tron network as well, but obviously the USDT was issued on Ethereum network. Now that it's available on Tron as well, we can discuss that, but there is so much ignorance, even when you are reading crypto media, that you have to be very careful of what you read, and if it makes any sense. Okay, now the fact that USDT trading volume has surpassed Visa's average daily trading volume is a fact, and that is fine. But how things are written matters, because people read it and believe it. Okay, and this is not correct. Okay, so but the reason why, so I opened it because obviously I read the headline, and I wanted to kind of bring it to you, but at the same time, it's good to give you a kind of indication of how careful you have to be in the things that you read. Let's have a look. Right. This is interesting. Okay, this US Treasury Department Financial Crimes Enforcement Network has issued a new warning about 4 cryptocurrencies. Those cryptocurrencies being Bitcoin, Ethereum, Monero, and USDT. So basically, what they are saying is that, look, be careful, because these new things called cryptocurrency are taking market share away from the US dollar. So we only want US dollar being used by criminals and not crypto. This is how I see it, which is really quite funny. But it's like they were saying, well, if they weren't using this, what were they using instead before? You know, they never covered that part. They seem to forget that part. Another thing that obviously you have to be very careful, because there's so many things that you can find on yourself when you're searching through the internet, and stuff that always looks really good. And now this is a pair of people in London has been arrested for running an illegal crypto exchange. I mean, I don't even know which one it was, because it's not meant, obviously they don't want to publicize it. But you got to be very careful. This is like, they had more than 1 billion of transactions on this platform. Okay, so they're not small things, and it shows you how dangerous this sector still is. Okay, interestingly, there was an article here about Italy. And Italy got new legislation into stricter crypto oversight and regulation. Okay, now the interesting thing is that this regulation appointed the central bank and the market regulator, called is the Consob, that looks after the Italian stock market, as the primary authorities to oversee crypto activities. You know, which is good, because it puts it on the same level as, you know, other shares and commodities and other things that the Consob overlooks. So it just places it in the right order, so to speak. What other things have I got? Oh yeah. This is interesting. This is MicroStrategy, you know, one of the biggest holder of Bitcoin, and it shows you all their different purchases, you know, and at what level, you know, how much they invested at different price levels, and it's quite amazing, because if you were looking as a as a trader, they have been absolutely rubbish. So they bought a Bitcoin, the majority of their purchases has been at very high prices compared to what price it had been previously. But still, even having bought at the most of the time at completely the wrong price, they are still in a massive profit. And even now, they keep buying large quantities of Bitcoin by issuing debt. So recently they've done, like this week, the third largest purchase of about 786 million, and that is at the prices that we have today. You know, remember what I was showing you before. Where are we? I can't remember which Bitcoin. I need to go and look at the chart. I can now go a blank. I can't remember where the data. I can't remember what the chart I was looking for is. Somewhere else. Okay, don't worry, I'll show you next week. But I'll show you what I wanted to outline is the average price purchase of Bitcoin that's now gone above 30,000. So that is looking at what people actually paid in their transactions for Bitcoin. and this is like this ratio as well that has been quite good at indicating during sell-offs, indicating local market bottoms. So we can see here in 2023, beginning of end of 2022, when we actually indicated the local bottoms, and any significant retest is when it's again indicated local price bottoms that we moved away from. So for me, things are looking good right now. Although price doesn't quite show it, but for me, it's all about taking opportunities to to go against the trend. So when everybody else is selling, you really should look at opportunities to buy, and the other way around. So when everybody's buying, then obviously it can be a good time to start seeing when to realize your profits. So I think I've covered everything I wanted to cover for today. Let me just stop sharing and see if there are any questions. Share any more of that. Okay. Okay, nothing here in the chat box. Anybody like to ask questions? Nice to see you back, Jonathan. Nice and refreshed, hopefully from your holiday. Any questions from anybody? No? At least let me know. Give me a thumbs up or thumbs down. Do you feel better or worse than you were at the beginning of the session? That's okay. If you feel better about it, you can go and feel even better by listening to Jonathan. Are you running a session today, Jonathan? So we can't hear you. Or is it me? No. I don't know what's you're not muted anymore, but I can't, for some reason we can't hear you. Probably something to do with your microphone, probably. There we are. We can hear you now.
My mic's died. Yeah, we'll be having a session today, but not a lot prepared. I'll just be doing Q&As probably. So come along and hear about Nike the pig.
Oh, fantastic. I mean, those are probably sometimes the best sessions. If you really want to know how cryptocurrency works behind the scenes, then go and listen to Jonathan. Jonathan is a Cardano stake pool operator, to remind you, and it's, for me, it's invaluable, because the one thing is just like trying to just buy something that you got no experience of, but by seeing how things are working on the blockchain, it will give you an idea of what this technology can be used for. And because that's, at the end of the day, this will only grow if more people use it, and people will use it if it is useful to them. Otherwise, they won't. So, Jonathan, if you don't mind posting your link, the link to your call, and then we'll call it a day. Okay, so that's the link in the chat box. I'll give you a moment to copy, and then after that, I will just wish you all a fantastic weekend. If the weather holds, at least it's warm here for once. Hopefully we are warmer than in Australia for a few days. Not for very long. Even in winter, Australian winter and UK summer. I don't know. Okay, so I'll give you. I wish you all a fantastic weekend, and I'll catch up with you all again next Friday. Okay, so have a great one, everyone. Okay, bye. Bye-bye.